Welcome back to Your Average Investor. Today we're going to be talking about Peloton stock and if it's time to buy the dip or not. Peloton has had a very interesting run where it IPO'd back in 2019 for about $25 a share, had a massive rally up to $171 per share before basically just being destroyed, and now it's sitting between $2.5 and $3.5 a share. So the question is, what happened to Peloton during this rally? Why did they fall off after the fact? And are they ever going to recover? We're going to dive into that now. We're going to talk fundamentals. We're going to talk technical analysis and talk our own thoughts through if we want to take a position or not. As always, this is not investment advice. Do your own research and subscribe to the channel so that you can help us monetize this channel so we can do more fun giveaways. Now, Peloton stock, this massive rally was primarily COVID fueled. They IPO'd and they took advantage of the COVID mania by saying, hey, everybody needs to work out at home now, so buy one of our fancy bikes with an iPad strapped to it for $5,000 or whatever they were charging. And everybody was buying them. And you can see they had a few quarters of a healthy profit, 27 cents per share, 20 cents per share, 18 cents per share, before turning to a small loss, and then a bigger loss, and a bigger loss, and a bigger loss. And they tried to tighten it back up here as they cut some costs, but overall, they've been operating at a loss ever since, really halfway through 2021. And it's got a lot of people worried about the future of Peloton. If you're not familiar with them, like this is literally them. It's just they sell fitness equipment like the Peloton bike, which is, refurbished. You can get it for $1,500. I don't know what it costs new. And on top of that, of course, they sell clothing and other exercise stuff. But then the big thing that they're going for are these classes. You can subscribe to the different Peloton classes and become a monthly member, and then you get all of your different online classes that you can watch, kind of like P90X back in the day, except for you've got all these random Peloton classes, 10-minute, 30-minute, whatever classes. I wonder if I just click on one, if this is going to, let me try it for free. Or if I want to, I can, of course, become a subscription member, and that's really what they're going after. So quick dive into their fundamentals. This is what's got the investors spooked about Peloton. They do sales of $1.7 billion a year right now, but their market cap's only $1.1 billion. The reason why is they're losing almost $1 billion a year. Even though they're doing sales of almost $3 billion, they're losing $1 billion a year. And if you look at their cash on hand is very low, $2.14 per share. We can do a rough calculation here. So 2.14 times, they've got 338,750,000 shares. That leaves them with $725 million, which is like, oh, that's so much money, but then you realize that's not. That's really about a 1 year runway at their current burn. If they were to just maintain what they did last year, they would run out of money within 12 months. Like literally, they'd be out of money. They wouldn't be able to continue operations unless they cut costs further or find some way to bring on additional money. And if you dive into their financial statements, the picture is actually a little bit worse than that now. Look at 2023 here. Here's 2023 revenue compared to 2022. Look at 2021, right? So 2021, 3.1 billion. 2022, 2.1 billion. They dropped by a third. 2023, they dropped another $1 billion in their connected fitness products. So they went from $3 billion to $2 billion to $1 billion in sales over the course of 3 years. That's the opposite direction you want to be going. Their subscription revenue has been increasing, though, and that's maybe the saving grace of this whole thing. So if you look at the subscription revenue, I went from 800 million to 1.4 billion to almost 1.7 billion. And total revenue is still decreasing, but again, saving grace of the subscription revenue not dropping quite as fast as the connected fitness products. So you have 4 billion, 3.5, 2.8. So $2.8 billion in revenue in 2023. And you can see their subscription is really what they're banking on carrying them. The problem is if they're not getting more people buying the connected fitness products, they're not going to be getting more subscription, right? These are tied together. The more people that buy these products, the more people that become subscribers. However, often these fitness products are going to be, once maybe every 2 or 3 or 5 or 10-year purchases where the subscription is an ongoing thing. So that's the saving grace right there. And that's where you have to say, can Peloton turn a profit with their subscription revenue in the next 12 months before they have to either do an offering and sell shares on the market to raise money, or before they have to try to come up with creative financing in some other way. If you look at Peloton's investor relations here, I noticed an interesting article, right? Let's see, right here. Peloton announces priced offering of $300 million, 5.5% convertible senior notes due 2029. So they're trying to raise money, right? They're trying to raise $300 million on these convertible notes. And I mean, gosh, 5.5% on Peloton. I can go get 5.5% on a 12-month CD right now. I would be amazed. The people that are buying this, I don't know, they just have to be doing Peloton a favor, because I can get guaranteed 5.5% on literally on a 12-month CD right now, and I don't have the risk of what if Peloton bankrupts. Now, if you want to look again, so this is the thing, right? 2.8 billion in revenue. Look at their operating expenses, $2.1 billion right here. So they have a total loss right now. Oh, and this is not, so they have cost of revenue right here of 1.8 billion. So that leaves them with gross profit of 900 million. But then they've got operating expenses of another $1 billion or so. So when you add their cost of revenue to their other operating expenses, you come away with a loss of $1.2 billion. And actually that's reflected down here. So net loss, $1.26 billion. So again, if we go back to how much cash do they have on hand, about $750 million, 750 million, and they're losing now $1.2 billion a year, they don't even have a year's worth of runway left. And granted, this is their last annual report. It's been a few months since this came out, so they could be doing better in their latest quarterly statements. In fact, let's just take a look at their latest quarterly result that they shared. And so here we go, 2024 third quarter, and let's just see how things are looking. Members in millions. This is probably the most important metric. Ooh, that's brutal. Year over year, they lost 1%. Quarter over quarter, they're up 3%, but year over year, they lost 1%. So you can see here Q3 23, Q2 24, Q3 24. So this would be quarter over quarter, right? Q2 to Q3, they're up from 6.4 to 6.6, but Q3 of last year 6.7 to Q3 of this year 6.6 million members. So they're losing. They're not gaining members. I mean, you could call that flat. Maybe their churn is pseudo negligible. But if they're not selling more connected products, this churn is gonna get bigger. That is extraordinarily concerning. Financial results, what I want to see, net loss. So here's their net loss. We want to see Q3 2024. They lost $167 million. It's less of a loss, so they've cut some costs, right? So less of a loss than the quarter before, where they lost almost 200 million, and the year before, where they lost 275 million. 167 million in loss. Let's just project that forward and assume that the next 4 quarters are going to be roughly the same, about 150 million loss. That means they're going to go through $600 million. They've got about 700 million cash on hand. It's not looking good. I'll say that. That does not look good to me. Total revenue, blah, 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 operating expenses, anything else here, full year outlook. Okay, let's look at this. We're lowering our full year outlook by 30,000 or 1%. So they're guiding lower because they're doing poorly. And so they're saying, hey, we don't think we're going to do as well for the rest of the year. Makes sense. From a financial perspective, I mean, if you really believed in Peloton and what they were doing, then it's like, yeah, maybe this is a risk you want to take because you think they can turn it around and start generating a profit within the next 12 months. I don't think that's going to be the case. I think people like going to the gym. Personally, I like going to the gym more than I like working out at home because it gets me into a different mindset, and I think that's going to be the case for most people. Sure, some other COVID type event could happen again. You're counting on luck for that, though. If you want that, like there's no there's no fundamental reason, in my opinion, to start buying Peloton right now. Now, if you see that they start turning around and generating a profit, or that, especially if the quarterly loss narrows significantly, then yeah, there might be a reason to start buying. Let's look at it from a fundamental perspective, or excuse me, a technical perspective now. I'm going to add a couple of simple price lines. I'm going to put one at IPO. That's a pretty common one. You want to know what's the IPO price. We're already well below that, so it doesn't really matter. But it's nice to have there. And then I'm going to zoom in, and we're going to put a line right here at the low. So here's a price line at the low of 2.7. And we're going to draw a nice little line here. You can see, obviously, we're in a series of lower highs. We'll go like that, right? So lower high, lower high, lower high, lower high. And in addition to that, we've got a whole bunch of these lower lows. Like if we just do another line right here, we've got a nice little channel forming. Whoops, let me grab that. So maybe our channel looks something like that, right? Lower highs, lower lows. This last rally didn't sustain at all. Literally after earnings, they went up for a couple days and they've sold off almost entirely since then. I would not be surprised to see Peloton making lower lows within the next couple of weeks. I could also see them just basing around that point. Like if you look back historically here, right? They did base a little bit at the $7 range. So, you know, for a few months, they're just up and down and basing at the $7 range. So maybe they start basing at this $3 range. I could see that as an option, or I could see them even hitting lower lows like 2.5 or something like that. Does Peloton ever become attractive enough to me to buy? Not with their current financials. Again, this is my own opinion. Do your own research. This is not investment advice for you. But I would stay away. I don't like the company. I don't think they've got good long-term prospects. There's nothing that they're doing that's extraordinarily innovative in the fitness space. They're just creating exercise bikes and charging monthly subscriptions for classes. And subscription models are great, but I don't think it makes a great company that has good long-term prospects, especially where they're bleeding so much cash right now. If this was something like, you know, a tech company that had a good way to capture a significant portion of a new market, or a market that, you know, is like if there was like a new TurboTax that came out and they were bleeding money, but they showed they were growing customers month over month, year over year, that would be something that's interesting. It's like, okay, they can knock out TurboTax and, you know, do something cool. Peloton, I just don't see it. I don't see it at all. So I'm staying away. If there's a rally and this thing goes back up to $20, $30 a share, awesome. Congratulations for anyone who decided to buy it. It's not within my risk tolerance though, so I am staying away. Now, if you wanted to trade it, let's just see if there's any premium here. The premium's not bad, probably because there's so much risk associated with it. So the premium's okay on Peloton if you wanted to trade like some covered calls or cash secured puts. Again, though, the risk for me is just not there, the risk reward. I'll keep an eye on it though, because again, if next quarter they come out with a quarterly report that says, hey, we've narrowed our loss, and instead of losing 45 cents per share, we're now only losing 20 cents per share, and then they get back to something where they're losing only 3 cents per share. In my mind, that's like, all right, maybe they've got a chance of turning this around and recovering, but I'm not seeing it right now. So thanks for tuning in, everybody. We'll catch you on the next video.